How do taxes work? Let's say you make $500 per week working at Woolies, but you don't take home the full $500. Your boss gives you $400 only and sends $100 to the Australian tax office or the ATO on your behalf. At the end of the year, the ATO wants to check if you pay the right amount of tax, so you will need to fill out a form called a tax return. You tell the ATO how much money you make and if you have any deductions that can help lower your tax. If your boss sends too much money to the ATO, you will get a refund. If he didn't send enough, you have to pay the ATO the rest. So comment below if you want to learn how to do your own tax return step by step. Next one is tax residency status. The amount of tax you need to pay depends on whether you are a resident for tax purposes. A super simplified explanation is if you are living in Australia for more than 6 months, you are usually considered a tax resident. You will get the tax-free threshold. The first $18,200 of your income isn't taxed. Anything above that is taxed at a progressive rate, starting at 16%. If you are staying for less than 6 months, you may be classified as a non-resident. You don't get the tax-free threshold and all of your income is taxed from the first dollar, starting at 30%. This is an oversimplified summary of the tax residency rules, which can be very complicated. So leave a comment below if you want to learn more. Temporary residency rules. If you are on a student visa, which is a type of a temporary visa, you might get special tax benefits under the temporary residency rules. So under this rule, if you make any money from outside of Australia, for example, shares, cryptos, selling properties that sitting in Vietnam, you don't have to pay any Australian tax on it. This is true even if you are Australian tax resident. Second, if you sell shares or other Australian investment apart from properties, you don't need to pay tax to the ATO. But if you sell something like Australian property, you might need to pay capital gains tax. Also, you don't have to pay the Medicare levy if you are not entitled to Medicare. You will need a special paper called Medicare Entitlement Statement, and it can take up to a few weeks to get, so apply early. To be treated as a temporary residency for tax, you must hold a temporary visa and do not have an Australian spouse. If you find this video is helpful, subscribe and share this post to help another friend. See you next time!